before I jump into the slides, one of the reasons we're doing trading as a business, this seminar, this webinar, is when I started working with a lot of newer clients, newer students, one thing I'm starting to see, and I've started to see as I've gotten more and more in depth with working on Marketfy and just chatting with people, is there seems to be a lot of courses, a lot of ideas, on trading strategies, methodologies, but there's not a lot of discussion on treating trading as a business, right? So whether or not you're trading futures, penny stocks, options, whatever it is, if you're coming into the world of trading, it's just like anything else. If you were to go out and open, when I was 20 years old, I owned an ownership in an online printing company. We had a business plan for that. Same thing with trading, right? There's a whole business plan that goes into these markets that I think does get overlooked, right? So in our live trade room, when I speak with a few traders, I see some people who come in, they're trading, products that, that don't have a tick value that work for them, trading with brokers that are charging them, $4,000 intraday margin on crude oil. Just certain small things here and there, charge for platform fees that, you could get for free at a different place, data feeds. There's just a lot of things that kind of come into the mix. And I think during the summer, as we start to slow down, it's kind of a good thing to look at, especially for newer traders, to see where we can tie up costs, save some money here and there, even if it's just a couple $100 a month. It does make a difference, end of the year. So that being said, let's kind of jump into these slides and we'll kind of go from there. So the first slide, work smart, not hard. So what do I mean by that? So if trading is a business and we're coming into the world of trading, we have all these different options. We have stocks, options, forex, futures, swaps, binary options. It's a really tough place to start. So what I'm going to talk about is the products I trade and how I treat trading as a business with the #1 goal of making money. So when I come into the market, it's not about me being right. It's not about showing off a P&L. It's about me coming in each day, each week, each month, making money and meeting a certain goal when I trade. So when I trade, I have a set of products that I use. And they're not just products that I've looked at and said, okay, look, I like the way this moves, or I had a friend tell me about this, so I'm going to trade it. I've researched these products. They make sense for me. They make sense for what my daily profit targets are. They move the way I want them to move. The margin's good on them. The tick value is really good. So it makes a big difference. So the products I focus on are Russell 2000, the euro, crude oil, and Australian dollar. So I try not to trade the ES quite as much as I see a lot of traders trade. I stay away from the Dow. I just try to keep my focus really in just these 4 products. And the reason I trade 4 at a time or keep an eye on 4 is there's some days where the Russell's going to move and the euro's not moving, or there's days where the crude's going to move and the Russell's not moving. So each day I have something to trade, or I'll have a setup to kind of go to in each one of those markets. So we'll kind of jump over to the next thing in trading as a business. So with futures products and the way I trade, we have to trade with margins, right? So when you're trading stocks, options, you can trade on margin with your equities, right? With futures, we have margins, and some of you may know this, so if I'm kind of preaching to the choir, just kind of bear with me. We'll jump on to some more stuff here. But it makes a big difference on what you're paying for your margin costs, right? And I go back to this, just speaking with a client of mine about a week ago. She was trading with a broker, and she's trading the Russell with me, and we're trading a lot of the Russell products. And I didn't know who her broker was, and she was paying, I want to say, about $3,000 or $2,500 per contract just to trade that product intraday. So this does make a difference. The reason it makes a difference, and let's just say we're starting trading and we're starting with $10,000 or $5,000, right? If you're trying to trade 1 or 2 contracts a day and your margin's $2,500 and you have a $10,000 account, well, your risk per trade is 50% risk on that of your trading accounts. Every trade you go into, you have 50% of your capital is into that trade, right? So when you're trading with a different broker, right, using the proper margins, finding a broker that can work with you, and first get you the margins you need to trade is #1 in my book, what needs to be done. So kind of talking about that really quickly, the products that I trade are the Russell, crude oil, the euro, and then the Australian dollar. So what I pay for my costs, and I'm sure it varies for a lot of you traders coming into the webinar, is pretty straightforward. I pay about $500 margin on my Russell, $1,000 on crude oil, $500 on the euro, and then $500 on the Australian dollar. Now, why do I trade these products, right? First and foremost, the tick value on the Russell is $1, right? It's a great moving product. So if I can, put out there $500 of risk in one contract and try and find a trade that makes you 2 or 3 points, right? It makes sense for me, right? Whereas different products, different indexes, the tick value versus dollar difference, the tick versus the margin rather, is a little different. Same thing with crude oil, right? So it's a $10 per penny payout on this, and I'm only paying $1,000 on my margin, so that my cost of doing business, right, makes more sense for me in the whole grand scheme of things is when I'm trying to, the whole grand scheme of things when I put together my trading plan. We're going to talk about weekly versus daily profit targets. So this is a little bit kind of out of sync kind of what we're talking about, but it does make sense in kind of the grand scheme of things with what we're talking about is trading as a business. So coming into trading as a business, one of the things that I've seen and I talk to new traders about and we look at is if your primary goal is coming in each day making money. You're not doing it for a hobby, you're not doing it for investing purposes, you're trying to come into these markets every month, every day, every week, and you're trying to pull a chunk of change out of these markets, right? It's important to put together a business plan, a trading plan, and say, look, am I trying to come in each day and make $200? Am I trying to come in each week and make $1,000? What are the goals and why, right? The way this ties in is because if you have certain profit targets, and it's almost step 3, I'm kind of jumping the gun here, but there's only certain products with certain product personalities that are going to allow you to do certain things, right? You're not going to be able to go into, let's say, the Russell and scalp out 80 ticks here and there were 10 contracts. The Russell is more of a product where, at least in my opinion, the way we trade it is we kind of swing it intraday. We try to find 2 or 3 points, 4 or 5 points, right? So if you understand the way that Russell product moves, or the way the crude oil market moves, or the way the euro moves, it all ties in, because then you can start to put together, you can say, look, I can realistically on 1 or 2 contracts make this amount on this product per day, right? It's unrealistic to go in the market and say, look, I'm going to go and scalp the Russell with 10 contracts. You're better off going to the E-mini market, in my opinion, putting on your size and scalping in that market because the way it moves, right? So it does make a difference with your profit targets on a daily and weekly kind of basis. So in my experience with most retail traders, most people I speak with, on the most part, they're starting with $5, $10, $15,000, and I'm just talking about retail traders, right? So this makes a difference again. Coming into the markets expecting to make $10,000 a month with $5,000 or $10,000, is it possible? Sure, absolutely. I mean, there's really good options traders out there that probably do it in every day, but is it realistic? Probably not. It's really difficult to do that with a smaller starting capital amount. So it ties in all together because we have to choose the right products, and that's why I'm kind of talking about these products that I choose. Because when I speak with traders, when I trade my accounts, I'm not using that much money. I'm working, going back to the starting slide, I'm working smart, not hard. I'm trying to find these products where I can put out X amount and kind of make, a little bit more with the capital that I'm putting out. So jumping down to the next slide, kind of the example I was talking about again. If you're starting with $5,000 in starting capital, what options do you really have? Right, there's penny stocks, there's some great penny stock traders out there. I've done it myself when I was a little bit younger. There's options, I trade options myself. There's Forex, and there's the futures markets. There's a few more markets I'm not talking about, but again, we're trying to talk about retail traders here and retail or new traders, so we'll leave those markets out. But when we look at this stuff, the reason it ties in, and I go back to it again, is there's an overall plan with all of this, right? You have to treat trading as a business. If it's a hobby, if it's coming against something you're doing for fun, you don't have a plan, there's not a strategy. If you're paying $4,000 or $5,000 for certain intraday margins, right? In my opinion, you're probably not taking this seriously. So going back to the margins and the cost of doing business, right? If you're trading intraday, I think this is important to understand. I don't know if maybe some of you in the webinar understand the difference between going out and paying $3,000 intraday or $2,000 for a Russell contract versus paying $500, right? So if you're starting with a $5,000 account, it's a difference between you, again, trading one contract and not hitting your margin, or you trading 3 or 4 contracts, right, and only being at 2,000, 40, 50% of your margin on that. So it's a big difference. if your goal is to come into these markets and treat it as a business. If you're trading with 100,000, 200,000, half a million, I would imagine, you're trading with a bank or a broker, a larger broker. But for retail traders, smaller traders, it does make a difference, to what you're paying in your margin costs, right? And who you're using as your broker, right? And again, I have no affiliation with any of these brokers. I'm just talking about this. And we're doing this webinar because I've spoken with a lot of newer students that have come through, and I start to see, what they're doing and where they're overpaying, and it does kind of hinder them, in the overall kind of picture.